Hey everyone, and welcome back. Now today we're going to be talking about rate cuts because this is something that's very, very important to crypto, maybe more important than many of us would like to believe it is or like to admit that it is, but it is very, very important. And so I did want to talk a little bit about kind of what this means, what we can expect to see from today based on different outcomes, all of that different type of stuff. So anyway, let's go ahead, dive right in. But starting out, let's look at crypto bubbles to see kind of how we are looking going into some of these rate cut meetings. And what we can see, obviously overall down on the day, we do have a couple up here and there. We can see we did have that virtuals video come out yesterday and already a decent bounce back from what we saw yesterday. We can see BitGet continuing to do well also. But other than that, I mean, not a whole lot of green here. I mean, it's primarily red. We can't even see we are red on the week. We do have Hyperliquid and virtuals. Those are the two that have kind of really been kind of leading the way. As I said, I did make that virtuals video yesterday. I'm probably going to be making a Hyperliquid one likely tomorrow, but not for certain on that yet. Though we can see the rest of the market down decently overall. We can see Bitcoin up 3.5%. Ethereum up 2%. So the majors doing quite well, even XRP up 2.3% down here. It looks like it's blocked by my picture, but overall the majors up a little bit, but the majority of the alts down and some of them down pretty big. Now, the reason I want to talk about interest rate cuts today is because this happens about every 6 weeks, and we can see it's actually just under 2 hours from now is when this meeting actually happens. But we can see that this happens at about every 6 weeks, and every 6 weeks the Fed essentially comes out and decides, are we going to raise rates? There's basically three outcomes, right? Are we going to raise rates? Are we going to keep rates the same? Or are we going to cut rates? Now, this is kind of like the probability tool of what the expectation is. And what we can see is it's almost certain that we see a 25 basis point rate cut, which is 0.25%. We can see there's a very, very minor chance that there are no rate cuts at all, but it's almost guaranteed that we do see that 25 basis point cut. Now, this, as we can see, is kind of expected and already priced into the market. The part where things get a little bit more interesting is their comments surrounding what the outlook for 2025 is. And that's why this meeting is so important, is because obviously Bitcoin has made a pretty successful run to the upside so far, as expected, or as kind of we could predict based on the 4-year cycle. Now, what we were expecting kind of following the 4-year cycle is that at some point in 2025, Bitcoin is going to top out. Bitcoin dominance is essentially going to continue to like bleed down to alts, and we're going to have an alt season where altcoins run primarily and Bitcoin is either going down or trading mainly sideways. Now, as I said in the beginning of the video, in my opinion, what the Fed does to interest rates impacts this massively, because if the Fed continues to cut rates as they're expecting, and I'll kind of give you the bear base and bull case. So the bear case would be there's no rate cuts today. That would be really bad, is that they don't cut rates today, and then they say we're probably like either not going to be cutting rates at all next year, or we're just not going to be cutting rates until we get some better like clarity on when we can start cutting rates again. That would be a bad thing. Kind of the base case would be we're going to cut 25 basis points today, and then we'll have 3 rate cuts in 2025, showing essentially like a somewhat constant like level of decrease, but not as much as like we've seen over this past year, right? The next like bull case I would say is we see a 25 basis point rate cut today, as well as 4 additional like forecasted cuts in 2025. Now, what each of these means essentially is how the economy is doing generally. If rates continue to cut, that means inflation is reacting somewhat as expected, or possibly even better than expected, and rates need to be cut essentially to kind of start to not make sure inflation goes too low and we get into deflation, because that's I would say some would argue even worse than inflation. This is the issue that China has been dealing with currently. So that's kind of like the one end of the extreme. The other end of the extreme, and kind of the bear case, would be that there's no rate cuts at all. And the reason why no rate cuts at all would be a bad thing is because that would mean the economy is essentially staying stronger than expected, inflation is higher than expected, and all of this stuff means that essentially we can't continue to cut rates because it would continue just to make it worse. And if it's too bad, then potentially they would need to raise rates again to essentially start to tamp down on some of this runaway inflation that seems to have at least subsided at this point in time. Now, that's why this is important, because if you're not familiar, risk on assets are highly, highly sensitive to interest rates, and crypto is about one of the most risk on assets you can get, right? Because if essentially the theory goes, if you can get 4 or 5%, sticking your cash in a bank account doing absolutely nothing, you're going to be a lot less interested in going out trying to find a return somewhere else. which I think makes a little bit of sense. But if rates are at 0 or negative or 1 or 2 or super, super low, then you're going to be a lot more interested in going out and trying to find a return on your cash, because currently it's just sitting in the bank doing nothing. So that's kind of the reason as to why high interest rates versus low interest rates are different, and why these risk on assets do so well in a low interest rate environment. That's why in 2020 we saw this absolutely ridiculous bull run, is because the cost of cash was basically free. I mean, interest rates were effectively 0, and so like people needed to go around to find risk on assets. So that's why that was important. Now, looking at Bitcoin, what we can see is we did see a little, obviously we've seen a very, very nice run to the upside over the past month or so. We'll zoom out and kind of take a look kind of longer term here. We can see though over the past day, we saw a little bit of a wick to the top, and then now we've started to pull back a little bit. I think right now this is just a little bit of uncertainty, people waiting to figure out what the Fed is going to do for certain. Like I said, we kind of went over, how the market would react with each outcome and why. And so this is essentially, I think, what we're just waiting for Bitcoin is there's a little bit of a sell-off. If things look to be stronger than expected, then I would expect to see we continue to see an extended run to the downside. If things come out stronger than expected, then obviously I think we'll continue to move our way up, and we might even be seeing, $110,000 Bitcoin by the end of the week. I would say is very, very possible. So if you are interested in trading Bitcoin, Ethereum, XRP, anything for that matter, you can feel free to use my link to BTCC in the description below. They are still doing this 10% bonus on first time deposits, which is a really, really good deal. Basically, if you are looking for a new place to trade, you can get basically 10% free money that you can use to trade as you're going through and buying and selling and doing whatever else you're doing within BTCC. They also, this is in addition to the extra bonuses up to $10,055 per user, which is really nice. Also, they've been around for 13 years, so you don't really need to worry about them just being one of those pop-up exchanges that'll be here one day and gone the next. They've been around probably longer than most of us have in crypto. And then also there's 300 plus crypto futures and up to 500x leverage. Again, I'd strongly discourage using leverage up to 500x. In my opinion, anything above 20x is probably like you need to be an expert, and anything above probably like 5 to 10x, you really should be highly advanced and know what you're doing. Really using leverage at all, you need to know what you're doing, right? So I would just say be very, very, very careful with leverage. Make sure that you don't get yourself in trouble. The easiest way to not get yourself in trouble is to not use leverage. So just keep that in mind. BTCC does do spot exchanges, so if you aren't wanting to go the leverage route, they have plenty of other options. It's not like you have to trade leverage. Also, there's no VPN or KYC necessary if that is something that you're also interested in. So like I said, go ahead, check my link in the description and get signed up if you are looking for a new place to trade. Now, moving on, I want to check kind of a chart that we have been seeing and following for several years now. And what we can see is we can see a general uptrend of as the money supply goes up, so does Bitcoin. As the money supply goes down, so does Bitcoin, right? And the only reason, or the only place that we have actually seen this kind of diverge is very recently, basically from like October. We've seen the money supply continue to go down, which is a little bit strange given that we have seen rate cuts, but we have seen the money supply continue to go down where Bitcoin has gone up. So this, essentially we have a couple of different possibilities or outcomes here as to why this could be. First one I would say is maybe people are trying to front run that, okay, well, rate cuts are happening right now, which means the M2 supply will go up, which means Bitcoin's going to go up, right? So let's just send Bitcoin up now because they're essentially going to front run the like forecasted uptick in this money supply. The other is that this chart just isn't helpful anymore, right? I mean, that is also a possibility as well. The other thing is maybe there's just some short-term kind of like variance that we haven't really seen too much in the past. I bet if we looked at this chart very, very closely, there's probably a couple different places where we could see this. We see something a little bit to the inverse here where money supply continued to go up in 2013, but Bitcoin's price actually kind of flash crashed a little bit. So, obviously not always a perfect metric here. We can see same thing here, from here to here, money supply actually went up, but Bitcoin's price actually went down. So there are a couple points in time where we see kind of some of these variations within, but usually it's Bitcoin moving down when money supply goes up, not the opposite. And so we will want to kind of track this a little bit, see what's going on, because the money supply has kind of started to decrease a little bit. This is the global money supply though, so this could be something where, you know, maybe some of the issues within like the Chinese banking system and deflation, a lot of that stuff that they're running into, which is really, really nasty to deal with, this could be impacting this overall chart that we are seeing here. So that is something I just wanted to point out with this M2 chart, is usually it's very, very, like, they follow almost in lockstep, as you can see, right? And so given that we are seeing a little bit of this divergence here, one of two things is going to happen, right? We're probably going to see money supply spike a little bit, or we might see Bitcoin kind of fall back a little bit, kind of to be more in line with what we're seeing on the M2 supply. So anyway, that's kind of what we were looking at today. Hopefully you found the information in this video. If you did, please do give me a like and subscribe. It really, really does help me out. I do try very hard to, like, you know, kind of keep up on just both crypto specific projects. So think about like Jasmy, ICP, some of the mainstays of my channel. But I do also think it's really, really important for people to understand kind of the macroeconomic events that are happening that ultimately impact kind of the movements on crypto, right? And so in my opinion, it's very, very important to understand kind of some of the whys behind some of these moves we might be seeing, because I think it will help us kind of paint a better picture, create a better framework for the future of how we can invest and how we can invest successfully, just because that is something that obviously is very, very important. So like I said, if you found the information in this video useful, please do give me a like and subscribe. Also, if you have any comments, questions, concerns, anything like that, just feel free to drop those in the comment section below. I do try to read and respond to all of my comments, so if you have anything you want me to see, that'd be a great way to do so. Thank you guys for tuning in, and we'll see you in the next video.